Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachardis, and joining me is investment analyst Cristina Partheniou. We'll be discussing the Reserve Bank of Australia's upcoming policy meeting and the outlook for the Australian dollar. So Cristina, the RBA is highly expected to drive interest rates below 1% to 0.75% at Tuesday's policy meeting, having reduced them in June and July at the same pace. What do you think the trigger behind this action will be?
Indeed, Maria, the RBA is expected to cut interest rates for the third time to new record lows this Tuesday, and I think data releases this month will be the main trigger behind this action, something that the RBA governor wasn't very happy to talk about last week. I mean, external factors such as the trade war and the global economic slowdown are still the main risk to Australia, but what the RBA would really like to see is an inflation at 2% year on year and an employment rate of below 4.5%, which would potentially drive wages higher. However, at the moment, we're far away from those targets, given that the headline consumer price index was last found at 1.6% year on year, and the unemployment rate has rebounded to 5.3%, despite government tax cuts and the easing monetary policy by the RBA. Even more discouraging was also the fact that the GDP growth in the second quarter showed the slowest expansion since financial crisis, indicating that the economy is growing on higher government expenditures and falling imports, which is not a very positive for the Australian economy. So I think that since the additional evidence didn't get any better from the last policy meeting, a rate cut is appropriate to happen this time.
I see. So now looking beyond this policy meeting, do you think that more rate cuts could follow?
Well, markets are currently pricing a fourth rate cut between November and December, and I think that will be reasonable if the upcoming data come worse than expected and political risks such as the trade war and Brexit fail to make progress. Pushing other central banks to ease monetary policy and the RBA to further cut interest rates to keep the Australian dollar competitive. However, we should be somewhat cautious about how comfortable the RBA is in cutting interest rates given the mounting household debt in the country. Even if there are no red signals at the moment about the Australian housing market, the RBA should be closely watching the effects of lower interest rates on credit demand and housing prices.
Right, and finally, turning to FX markets and the Australian dollar, what's the outlook for this week?
Well, the Australian dollar continues to face downside pressures against the US dollar. It's currently near the 0.67 key support area. So this week will be very interesting to see whether the pair can break below that support in case of a more dovish policy meeting or otherwise stay within the range-bound trading it recorded over the past 2 months in the event of a more positive RBA policy meeting.
Cristina, thanks so much for joining me, and thanks for watching at XM.com.